Darren, why is choosing the right business entity one of the most powerful tax decisions an entrepreneur can make?
Well, for most of our clients, they save self-employment tax. So if you come to us as a LLC, then you're paying self-employment tax. It's an extra 15.3% on top of regular federal income tax. So that's, for most people, that's what it is. You just save self-employment tax by being an S Corp. Uh, some people, they need to be a partnership because they need a lot of flexibility in taking assets in and out of the business. That's a small percentage of the people. That's more like for real estate investors. For real estate investors, for instance, we don't make them self S corps because the kind of income they generate is not subject to self-employment tax in the first place. And they're doing a lot of complicated deals where they might be taking assets in and out of a partnership, and partners are joining and leaving. And in that kind of situation, you want to be a partnership because you value flexibility. But for just a regular operating business, especially if you're just like a husband and wife owned business or a single member business, then and you have operating income that would be subject to self-employment tax, then it's S corp, S corp, S corp, S corp.
Mhm. Okay, so can you briefly explain the key differences between an LLC, S Corp, and C Corp from a tax perspective?
Yeah, sure. It's a really widely misunderstood situation, but so you form the LLC at the state level. The state doesn't know about S corps. So at the state level, you're either a corp or a LLC or a partnership. And then at the federal level, you elect with IRS to be taxed as an S corp. A partnership can be taxed as an S corp. That's not the default. You have to make an election. A LLC can be taxed as an S corp. That's not the default. You have to make an election. So if it saves you tax, we elect to be taxed as a S corp. But it's the way we like to describe it is you're a LLC based S corp, because when you form the entity, that all happens at the state level, at the Secretary of State level. You form the entity, then it's at the federal level with IRS that you tell it how you want to be taxed. That's where you become an S corp. So none of your vendors, nobody needs to know that you're an S corp. As far as what kind of entity you are, as far as what you formed at the state, you're still an LLC, or you're a corp if you formed a corp. But most people, it's better to be a LLC when you first form, because the the default classification for a LLC, if you're a single member, the default classification is sole proprietor. If you're a multi-member LLC, the default classification is partnership. But if you form a corporation at the state level, the default is corporation, and then you pay double tax, and the default is like a C corporation tax, and that's not good for almost anybody to be a C corp. So we always start with LLC, and then if the company is profitable enough, then we elect to be a S corp, and the only reason is to save tax.